Are eviction costs allowable for tax purposes? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. During our property adventures, there is always going to be that one difficult tenant. And unfortunately, if it's not happened yet, it will likely happen at some point in the future, as we can't unfortunately escape the fact that sometimes an eviction needs to take place on a tenant where unfortunately it's not worked out, they're not paying their rent, and you need to get them removed from the property. Now, the eviction process is not a quick or simple process, and we are not going to go into that today because I'm definitely not a solicitor and definitely not qualified to take you through that process. However, with all those costs that you are incurring for legal fees, court fees, potentially fees to get paperwork sorted, as appropriate to make sure that you're doing the process in the right way so that you have the legal footing to evict them and then get bailiffs to remove them from the property, there are costs involved. And the key question we're going to answer today is, are they allowable? And the simple answer hopefully is yes. Now, these are allowable against trading income. So if you're evicting someone and then reletting the property, then they're definitely going to be allowable and they can be set off against your rental income, which is great to help reduce any taxes, especially if you have had a period where they haven't been paying rent and that rental income is that much lower. So hopefully that will minimise the tax for that period and help minimise the tax when you do get that property relet and you start getting hopefully a good income from the property again. One thing we do need to mention in this rather short video but hopefully useful and important point is, if you are selling the property after you have evicted someone, then those eviction costs are not going to be allowable against the capital gain that may be applicable on the sale of the property. The eviction costs will go against the income that you may have already generated in that year so that you can reduce any tax on any trading income, but they will not be allowable for capital purposes and will not reduce the capital gain that you have to pay. Now, as an individual, this means if it has been for a long period of time that the person has not been paying and you haven't got any actual rental income and it's only the eviction cost that you've got as a loss, then it may be that loss sits there for a period of time and it will stay there on your tax account for when you may do any future property rentals, and then that can be used again in the future. If you don't do any further rentals in the future, then unfortunately that loss may just keep going and get lost in the mix in the future because you never actually do anything to make use of that loss. There are options where we may be able to move it against other income that you do, but that will depend on what the tax position is at the time where things are being looked at. And that is a conversation with your accountant to see if there is any other uses for those rental losses anywhere else in your tax position. From a capital point of view, it is again definitely not going to be allowable as an individual. For a company, those losses are going to be there available to use against your other trading income. So if you've got more than one property, if you've got eviction costs in one, those will be set against any profits you're making in the other. So the overall net position will be taxed, not the position on specific properties. If you do end up selling that property in the company, then there may be some relief for those losses against the capital gain that you make on the property, depending how the tax position sits at the time. As tax legislation does develop and change, sometimes you can, sometimes you can't, and it will be based on the point where you're actually doing the eviction, you're doing any capital gain, that this would need to be examined to see what availability there is for setting off those costs, those losses, if you've got no other rental income to set it against, to see what they can be used against within the company and whether they can be set against any of the other income from a capital position, whether it can be transitioned. The rules on this have changed over the last few decades, so depending on the time period, there may be further changes in the future where it may be possible, where at the moment it is not possible. Overall, with eviction costs, the general premise, as always, is keep the cost to a minimum, but obviously get your property back. But if you are going to be reletting the property, then it's definitely going to be an allowable expense against that future income, so that hopefully the impact is going to minimise your tax, so you're not getting a double whammy of being hit with additional costs and then being taxed on that additional income in the future. So make sure you keep track of all those costs. Make sure you keep track of any invoices, any expenses, so that you've got those ready to go when you need them for doing your tax returns, whether it be company or whether it be in your own name. So you've got all the evidence should HMRC want to review any of those invoices, expenses, to check that they are allowable expenses for you or your company. Hopefully today you've discovered exactly what you can claim when going through an eviction and where. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.